Class started. It is 7:11, so I'm gonna get it started now. Welcome everybody to Shock Stock Sundays. This is Michael Clark, owner of Culture Shock Investments, here with you. And this Sunday we're going to be doing a brief review of the last couple weeks' lessons. We had some holidays come up in between, so I want to make sure we do a review and lock in the knowledge for everybody this week before we progress on to the next section. All right, so we went over understanding major stock indexes. So I want to go through this presentation again. I'm going to go through it much quicker this time, not as much detail, but I want to hit some highlight points that I feel like are very important for you to lock in. Of course, all the information is important, but there's some key points that I want you to lock in, and these are the things that I'm going to put on my test for this section for everybody that's following along, okay? So we got the stock market indexes. You know, what is the stock market index? The stock market index, let me zoom in for y'all a little bit. All right, there we go. I'll just shift it over like this. There we go. So you got a stock market index. The stock market index is a collection of companies that is designed to represent a specific sector of the stock market. So you have indexes that represent tech sectors. You have indexes that represent financial sectors. You have broad indexes that try to represent the whole market, like the S&P 500. So these are what we're talking about when I say a stock index. These are where you want to be when you are just starting out. So indexes are going to be your best friend when you are a new investor in the stock market. You want to fill up your portfolio with one or two indexes and kind of start your journey from there, and track the individual stocks that are in the indexes from there before you start exploring individual investment on your own. All right, especially if you're not watching the stock market every day. So like I just said, the S&P 500 is a broad index. It holds a lot of different companies. It's not really one sector focused. That's why people look at the S&P 500 as a sector where you're going to look for the broad performance of the whole United States stock market, okay? Now you have the Dow Jones. The Dow Jones represents some of those old established retail and tech U.S. companies. It used to be mostly... it's pretty diverse as far as sector. They had oil and gas in here. They had fast food with McDonald's. They had retail represented, and they had financial sectors represented. But the Dow Jones is only 30 blue chip U.S. companies. So instead of 500 companies like S&P 500, the Dow Jones only uses 30 companies. So it's much more condensed and focused, and it gives you a deep pulse on the United States. Because when the Dow Jones is going down, that means those legacy companies in the United States are suffering. So if the Dow Jones is suffering, that means whatever pullback we've seen in the market has surpassed hitting the tech market, surpassed hitting everything that is more volatile, and now it's hitting the stable Dow Jones, which is supposed to be really like the support for the market. All right. You got the NASDAQ. The NASDAQ is tech related and tech heavy. All right, NASDAQ is going to have all your technology companies, the Teslas, the NVIDIAs, the Facebooks, the Googles, the Microsofts, all right, and the Apples. That's where you're going to find in the NASDAQ. They're going to be represented by the Triple Q ETF in the stock market. So on TradingView or Robinhood, whatever platform you use, if you type in QQQ, that's Q 3 times, you will see the tech index. That is going to be the tech ETF that you can explore if you want to expand your ETFs into technology sectors, which I would say is not a bad idea. All right. The global sector and specific indexes, you know, if you want to do deep researches and dive into those, I'm not going to dive too deeply into those. Even though we do have a potential push coming in the Russell 2000. Remember, I told you that I see a lot of action in what we call 13F filings. 13F filings are the reports that institutions that invest, they have to put in, financial firms that invest in the stock market, they have to release these reports every quarter letting you know what they bought over the last quarter. And a lot of people bought up the Russell 2000 in these last reports. So keep an eye on that. I'm going to go down too deep into that. Investment tool, using indexes as investment tools. I like this because you can measure your investment performance versus the index, and it gives you an idea of how your investment strategy may be working. If you're just investing in the index itself, then this is not going to work for a benchmark for you because you're going to be moving with the index. But if you're doing like the S&P 500 mixed with a couple tech companies that you want to explore, then compare how your portfolio is doing to the S&P 500. And if you're being outperformed by the S&P 500, you may want to be tweak some things in your portfolio in order to at least be on par with the returns of the S&P 500. Let's keep it pushing. So like I was saying earlier, the S&P 500 is broad focused. Dow Jones is more blue chip companies, the stable companies of America, the legacy companies, the old heads like I like to call them. And then you have the NASDAQ, it's the newer companies, tech heavy, real future focused. And Russell 2000 is the smaller cap companies, companies that have small market caps and are much more volatile in their price movement, but they have a lot more room for growth as well because they're small cap companies. Okay. All right. So that was the major indexes. I don't know if you have any questions, let me know, but that's the major indexes. Those are the basics right there. And we're going to go over, now I want to go back into the basics of how to buy and sell stocks. A lot of people are just starting out. So a lot of you are just starting out on your platforms and learning how to buy and sell stocks and what you're actually even looking for when you're buying and selling stocks. So you have to pay attention to this presentation right here. So you got to understand the basics of opening a brokerage account. You got Robinhood, you have E-Trade, you have TD Ameritrade accounts out there. These are very simple to open accounts. Now, when you're opening them, they do ask you a few different questions based on your knowledge level. It's going to ask you how advanced are you in certain types of trading. And based on how you answer those questions, it's going to give you access to certain types of trading on the platform. So if you answer the question like you have little to no experience, it's going to give you access to the really basic investing tools where it'll probably just allow you to buy and sell stocks. You're not going to be able to do option trading or anything like that. Okay, so if you do want to make sure you're able to do option trading, and that's something you're interested in, then I suggest before you go through opening a portfolio, you come through our website. I can help you open that account and make sure you get approved for option trading. So you have a few different type of brokerages accounts. You have the standard account, which is the account that most people own on Robinhood, E-Trade, etc. So you can open the account. There's no restriction on withdrawals. They're going to hit you with pretty heavy capital gains tax on any short-term gains you have, which is going to be over 25%. I think it stands right now, or Trump may have lowered it to around 20% capital gains tax on short-term gains. Right now is actually word going out actually that they're trying to eliminate taxes on gains, capital gains that you get from stocks and crypto. That would be very interesting if they pass that law, because that's a lot of tax money that is not going to the government and staying in the hands of the people, which is not something I'm totally against. It's just to be interesting if they actually allow that to pass, because that's going to increase individuals' wealth astronomically if you don't have to pay that short-term capital gains tax. And then it will also inspire more people to want to invest, because now it's like this is some place you can put your money and make money without being taxed. It gives you some place to escape government taxes versus the federal taxes you're going to get on your job, even though they're trying to get rid of state income tax as well. But a lot of these things are perspective. It's not guaranteed yet. Like I said, the popular brokerages, we already went over those. You could look at those yourself. Ticker symbols. So a ticker symbol most of the time, for those who are new to this, is going to be a shortened version of the full company's name. So like Apple, instead of spelling out Apple all the way, it is AAPL. Nike, instead of spelling out Nike, is NKE. So a lot of the times when you see people tweeting about a company, if they're someone who's into stock lingo, they're usually going to tweet out the ticker symbol. So that's going to be that short abbreviated version of the company's name. So you want to make sure you're familiar with the ticker symbols, especially of the companies you're interested in. So when people are talking about them and they may say the ticker symbol but not the company's name, you still know what they're talking about. Now, this is an important part I do want to highlight. I do want to highlight how to read a stock quote. So you're gonna, when you go to buy a stock, you're gonna see a lot of numbers appear in front of you. There's gonna be some numbers on the right hand side of the screen. Hold on, I'm gonna show you. Let me pull it up right now. Let me pull it up on Webull right now for you. I'm gonna show you an example. So you're gonna have the bid. It's gonna show you a lot of things like the bid price, the ask price. It's gonna have the volume, the 52-week low, 52-week high. It's gonna give you a snapshot of information on the company. And now, based on that information, you're going to determine if you want to buy or not. So let me bring Webull over here for you. I'll update that later. I'm going to make this part very big. In the world. And we're going to pull this over here. All right. So this is what an order screen is going to look like. Let's open this up. All right. So you got it. It's saying buy. You got this is the trade screen right here. I just pulled up. This is for the QQQs. So what is it going to have? It's going to have the buy side and sell side. Let me show you right now. Hold on. This is not the screen I wanted, honestly. Hold on 1 second. All right. I don't know what's going on with this screen right now. I don't know why it's not coming up normally on Webull. I may have to open up. Let me do Robinhood. Robinhood come through in the clutch. But essentially what you're going to have the buy side, the sell side. It's going to give you bid at price and ask price. So there's going to be two different prices on the screen for the same stock. You're going to see SPY have a bid price of maybe, let's say, 580 and an ask price of 581. So that's $1 difference in price. That's on SPY. That's really close. Some companies, it's even further. Some companies you have like a company that's trading at $15 on the ask side and the bid side is like $13. That's a pretty big price difference for a smaller company. Now, what it's telling you is that the people who are bidding on the stock, the people who are trying to buy it, like me and you, if you're trying to buy at the time, you're trying to buy it at the bid price. So that's the price that most people are offering to buy the stock at. And the ask price is how much people who are selling it are looking to sell that stock for. So you got to look and see what the bid and the ask price are, and you want to determine where you want to put your offer in. So you have different types of way you could put in sell orders. All right, you got limit and you have market sell orders. Those are different types. If you put in a market order, it's going to put in the order at the ask price. At whatever price the people are trying to sell it at is the price you're going to buy it at. Okay? And now what the pros of that is you get a quick execution on your order. Your order is executed immediately. So if you want to get in the stock fast because you see a move getting ready to come and you're not really concerned with that $1 or $2 difference, you just could order at the market price. And that'll get you in the stock immediately. Now, what happens is that the ask price may end up differing from what the actual stock price is. So you may buy it for more than what the actual stock price is trading for at the time. So you could see yourself buying a company maybe at $101 when it's currently trading at $99. So you paid $2 more than what it's trading for. So automatically when it starts, you're going to see your position being in the negative. Sometimes when you do the market order. A lot of people freak out when they see that, like, oh my God, I just bought it. How am I down 3% or 4% already? It's because you put in a market order and the price probably just dropped really quick as you bought it, or it was already a little bit lower than the price you were putting in at because the actual price was somewhere between the ask and the bid. All right. With the limit order is how you have control over your orders. This is how I place most of my orders because I want to buy at a very specific price. So I have my price levels set. When I put the price levels out for the week, there's usually a specific price I want to buy at, or the option contract I want to buy at a specific price. So I'm going to put in a limit order. So this applies for buying stocks and buying options. You have market and limit orders in both markets. So when it comes to options, I definitely want to put a limit order because I want to get that option contract at a specific price in order to make the profit that I'm looking for. All right, so that's why I like limit orders more than market orders. Stop loss order. So you have the stop loss order, which is a very powerful tool you got to be able to use. The stop loss order is available. I know it's on E-Trade. It's on Webull, but it's not. It doesn't operate the same. It's going to be more like a limit stop order. But a true stop loss order is pretty much where you're going to have a set price on the stock that if it goes down to that price, it's automatically going to trigger a sell order for you. So it'll cut your loss there, or it'll save your profit from getting any lower at that point. A lot of people, there's not only stop loss doesn't only mean that you're going to put it in where you're going to be losing money, right? Or you're going to be in a loss on your contract. A stop loss could be you're in profit already, and what you're doing is let's say you got 30% profit on a trade or an investment, and you want to put your stop loss at the 20% to make sure that if it gets down to 20% profit, you lock in your profit and you can walk away. That stop loss orders are used for that as well. It's probably best used for that, honestly, than the other way around. When you're in a contract, when you're in a stock, you don't necessarily need a stop loss order because you already have the price where you know you should probably be getting out that stock at. If you're charting, which is what we're going to be doing right after this class, we got the charting session coming up at 8 o'clock. So if you're in here, make sure you are locked in for the charting session. But when you enter a stock, you want to have a stop loss price already that you know that if it gets below that price, you're going to sell. Now, as you get into profit, you're going to have to find a different range or a different level in order to have your stop loss at. Now, on a lot of brokerages, you could say, oh, I want a stop loss at 10% from here. So if you're up 30%, you don't really have to do all the math and find the price level. You just say, if the stock comes down 10%, sell my stock for me. So that's a powerful tool, especially for beginner traders. You want to make sure you use. You got to. All right. So now, place your first trade. Step-by-step walkthrough. How to place your first trade. Very simple. You're going to go ahead, log into your brokerage account, whether that be E-Trade, Robinhood, Webull, whoever that is. You're going to search the ticker by ticker symbol. Okay, hold on. Let me go ahead and see if Webull is going to cooperate now. I'm going to try to start this back up. Let's get this. Hold on. Come on now. So once you get your brokerage account open, you're going to look for that ticker symbol. Now the ticker symbol is going to be based on what company you're looking to trade right now. So a lot of you may have a particular company that you're interested in following already. I say you want to look for that company's ticker symbol, whether that be what the hell? Okay, I was about to say. Let me hide my can't show y'all all the money in here. Let me hide that real quick, but I'm gonna show you how to place this order. So that ticker symbol, like I said, most of you should be starting off with the ETF. So it's going to be most likely SPY as a ticker symbol you want to start looking at. You want to look at the QQQ, which is one I gave out earlier. You want to look at the IWM. That's a more risky one. That's the Russell 2000. That's something I'm going to be exploring pretty soon, honestly. And you can also look at The Dow Jones. Hold on, let me see the Dow Jones one because I don't trade the Dow that often. The Dow is pretty slow moving, but you could get a lot of returns on there if you're a futures trader. But don't worry about futures trading yet. We are going to worry about. Hold on, let me get this up here. We're going to worry about basic orders right now. Here we go. Goodness gracious. All right. I don't know why this is acting like this. This is very weird. Just deleted the whole widget for me to order. Okay. Okay. I don't know. I can't get this to work. I don't know what's going on. So I'm going to do it over here. We could do it in the paper trade. Alright, so this is the paper trade. Now, Trading View offers. This is something that you could try to take advantage of yourself. This is a little more complicated to use, honestly, to me than a platform like a Robinhood or something like that. So if you can, I would look at for the Robinhood, which is, I thought I had that on here as well, but I don't. It doesn't look like it. So when you go to place your order, what you want to look for? What we talked about earlier, we said the ticker symbol. That's going to be, we said something like SPY. So we will look for SPY, right? You'll have something like SPY on your screen. And you're going to then consider, all right, now where I see SPY, you don't know price levels yet. So you're not too familiar. You just want to get familiarized with your platform, whether that be E-Trade, Webull, Robinhood, whatever you're using. You want to get to these screens and see how the functionality looks, all right? So you're going to go ahead, you choose buy, and then you set the number of shares that you want to buy. So when you go to buy the shares, let me see if it puts it on here for me. I could put in a buy order, right? There we go. So I could put in a buy order. It's going to have the buy price, sell price. On things like SPY, you're not going to get that much of a difference between the buy and sell because so many people are buying and selling it. The ask and bid price are usually not that far apart. But let's say you want to put in a limit order. It's going to ask you what price you want to place it at. You could put the exact price that you want to place the order at. You want to place the buy order at. Right now, SPY is at $588. So I don't think I want to buy SPY at $594. I want to buy SPY closer down towards this 588 level. So we're going to change that price to 588 if we're going to be buying SPY. You see how I put the buy line down here once I change that? Okay. Now, how many shares do I want to buy? On here it says unit, right? So I could pick how many shares that you want to buy. If you're buying shares at $588 a share, you could determine that based on how many shares you want to buy. On platforms like Robinhood, you could do partial shares. So you could put in sometimes the dollar amount you want to buy. Okay, so you could put in, I want to buy $100 worth. You don't have to buy a whole share. You could buy a partial share. But on some platforms, they only force you to buy full shares. Okay, so after I pick how many shares I want to buy, on this platform with TradingView, I could set my take profit. I could set how many, on here it's called ticks. It's pretty much how many dollars it goes up by. I could set to take my profit at a 75 ticks is 75 cents. Actually, on here is cents because this is a futures market. But most of the time, you could set your price amount in here where it will be $595 if you wanted to take profit up there. You could just put $595 as your take profit, and your stop loss price you could put something like $586 down. This is simulating futures trading, which is why this is a little bit different on TradingView. Because I didn't really want to use TradingView. I wanted to use Webull. But that is the same format. It's the same thing. It's just different denominations that you're going to get because it's futures trading versus stocks. But on your Robinhood platform, Webull platform, you're going to see the same thing playing out. Now, that's how you're going to go and practice placing an order. If you're a beginner, you got to practice this. You want to see how the whole process goes before you actually go in and start spending your money doing this, okay? Now let's get back to the presentation real quick. Oh, shit. If you got any questions, anybody got any questions? Anything they're not sure about? Okay. So now, when you're placing your order, you always want to double check your order. You always want to double check the ticker symbol. You want to make sure it's the right company. Some companies have similar ticker symbols, so it could be a little confusing. Which is why you usually, as a beginner trader, you want to be investing underneath some guidance from somebody, because it's very easy to go out there and jump into the wrong ticker symbol thinking that you're in the right company and you're not. Like Zoom, Zoom video conferences. You got Zoom. Let me pull the ticker symbols so y'all could just see how many different ticker symbols they could be out there. So you got Zoom video communications, but then you got ZM Zoom video communications. Oh, which one is the right one? You wouldn't know, right? So if you're not in the stock market, you're not familiar with ticker symbols or what you're looking for as far as where stock market is trading for, this is a key to help you identify. This is in a whole nother stock market right here. So Zoom, you would think this is Zoom video call, the one that everybody uses here in America, but this is not. This is a whole different company. So you come over here trading Zoom, and you'll be trading an entirely different company than the actual Zoom company, which is ZM, right? It's two different companies. So you could get yourself in a bad spot by not understanding the ticker symbol and not understanding what position you're getting yourself into. So always double check your trade. Make sure you're in the right company. Start with small amounts of money. Don't go all in with every dollar that you have to invest right now. Don't throw it all in the stock market at once. Get an understanding of what's happening in the market. Get an understanding of what you're even investing in. And then you start scaling your money in more and more. But in the beginning, I suggest you start with small amounts. Start with simulated trading, doing things like paper trading and simulated trading. They have a lot of simulated or trade simulators out there that you could use to start getting your feet wet. All right? And avoid placing market orders during extreme volatility. That is something you don't want to do, especially in a market that we're in kind of right now, which is pretty volatile. You get caught out there being unaware of what you're doing, and you place in a market order in a stock market that's rapidly going up and down in a day, and you can end up losing a lot of money because you didn't pick the exact price of where you wanted to enter. So you got somewhere in there, the high, and you knew it was going to come back down low, but you didn't get that lower price because you didn't put your limit order in. You put in a market order and they bought it at the high of the day, and now you're at the low of the day thinking, should I dollar cost average in? Oh my God, I'm already down 50%. I didn't mean to buy it at that price. So do not place market orders in during volatile times. Stock market is open from 9:30 a.m. to 4 p.m. For you guys don't know, Monday through Friday. All right, you get pre-market price action starting at 4 a.m. You'll see some price market action there. After hour, you'll see price action on a lot of companies stop moving at 8 p.m., but they do have a lot of 24-hour markets now. A lot of stocks move on a 24-hour market, and you'll see their price action moving all through the day and night. Dun-dun-dun. All right, so that was the quick review. I just wanted to make sure I did that review with you guys. For anybody that had missed the first couple weeks, here is a QR code for you to follow us and become part of the community, become part of the Discord community. You can follow on TikTok, as you're doing right now. Have subscribership on here. Subscribe so you can get access to the Discord community via TikTok. I'll try to make it easy as possible. YouTube is where you'll get some free trading tips from me on the Culture Shock Investments YouTube channel. The Culture Shock Investments on everything. So make sure you share these lives, you share these posts, and spread the information and knowledge amongst the community, because the free gems are free for now, but as we expand and we grow, there's going to be more private and exclusive events. But I'm always going to try to make sure I provide something free for the community so people have some information from us to level up their portfolios and their accounts and their whole economic picture in their life, because it's not just about the stock market. You also have real estate, you also have trust funds, you also have life insurance. These are all different routes and ways that Culture Shock Investments will help you manage and understand your financial picture and how to put a team together, because really that's what you're putting together, a team, when you're doing life insurance and you're doing the stock market and you're doing crypto and you're doing trust fund accounts. This is a team you're putting together of wealth. That's your wealth squad you got to put together. So I can help you formulate that and put something together that makes sense for your income, because nothing is really out of reach for anybody. You just got to get started. Okay, so get started today. Follow us on here. Follow us on YouTube, Instagram. And if you learned anything today, I appreciate the follow, the like, and the share. And I will be back on at 8 o'clock for the charting session tonight. We're going to chart some price levels and get ready to make some money this week. We got some good money to make. Made some good money the last few weeks in the market with that volatility I was just talking about. But you got to know how to play it, and you got to know the price levels to look for. All right? All right. I appreciate everybody that came through. Show some love. And I'll see you all at 8 for the charting session. And next week, Sunday, for the next class. We're going to move on to the next lesson. This was the review. I'm going to put out a test in the Discord for the members to take. And make sure you know what I taught these past couple lessons, and it's locked in. And if you want the test and you're on here on TikTok, DM me, and I will make sure I get you a copy of the test as well. All right. Peace.